SpaceX stock has been on an absolutely wild ride. The company went public at $135 per share. Within days, the stock exploded higher, and now SpaceX has fallen all the way back toward its IPO price. So the question investors are asking is simple. Is this finally the opportunity we've been waiting for? In this video, I'm breaking down SpaceX's most recent quarter. Take a look at the charts, discuss the three biggest risks to the business, and I'll give a one-year price target for the stock. As always, everything on this channel is free. I'll never try to sell you a course or a membership. I work as an equity analyst and enjoy sharing my research. Let's generate alpha. Let's look at SpaceX's second quarter results. This was the company's first quarterly earnings report since going public, and the headline numbers were impressive. SpaceX generated $7.8 billion in revenue, up 92% year over year. That was well ahead of Wall Street expectations. The biggest contributor continues to be Starlink and the connectivity business, which generated approximately $4.29 billion in revenue, up around 66% year over year. Starlink also reached 12 million subscribers, roughly double the number from a year earlier. SpaceX's rapidly growing AI business generated $2.56 billion in revenue, while the company's traditional space business, including its launch systems and spacecraft, generated approximately $962 million. Profitability is also moving in the right direction. Adjusted earnings before interest, taxes, depreciation, and amortization reached $3.5 billion, compared with just $1.2 billion a year ago. That's an increase of approximately 191%. However, SpaceX still reported a net loss of $541 million, or 9 cents per share. But here's the number investors really need to watch: $18 billion in capital expenditure. SpaceX is spending aggressively, particularly on AI infrastructure, data centers, and Starship. One number investors shouldn't overlook is SpaceX's contracted sales. During Q2, the company announced multiple cloud services agreements representing $14.1 billion in contracted sales. That's important because it suggests SpaceX's expansion into AI and cloud infrastructure isn't simply a future concept. Customers are already committing billions of dollars to these services. So my takeaway from Q2 is pretty simple. Revenue growth, exceptional. Starlink growth, very strong. Profitability, improving. But capital spending is enormous, and that's going to become very important when we look at whether SpaceX stock actually justifies its current valuation. Now let's take a quick look at the SpaceX chart. Because SpaceX only began trading in June, there isn't enough history for indicators like the 200-day moving average to be meaningful. SpaceX priced its IPO at $135 per share before surging to an all-time high of approximately $225. But that initial excitement quickly disappeared. The stock subsequently fell to around $104, representing a decline of more than 50% from its peak. Since then, we've seen a strong recovery, with SpaceX climbing back toward $140 and reclaiming its $135 IPO price. From a technical perspective, there are two levels I'm watching. $135 is the key support level. If the stock holds above the IPO price, that's a positive sign. Another key level I'm watching is $150. Not only is this a major psychological level, but it's also where SpaceX began trading on its IPO day. A convincing break above $150 on strong volume could signal that buyers have regained control. But until that happens, I view $150 as an important resistance level. But if SpaceX falls back below $135, watch out. So my technical view right now is short-term momentum, bullish. Long-term trend, still too early to determine. Now let's look at the three biggest risks I see with SpaceX stock. Risk number one, massive capital spending. SpaceX is growing incredibly quickly, but that growth comes at an enormous cost. In Q2 alone, the company spent approximately $18.4 billion on capex, including roughly $15.8 billion on AI infrastructure. If these investments don't eventually generate strong returns, SpaceX could burn through enormous amounts of capital despite impressive revenue growth. Risk number two, execution and valuation. At a forward PE of 60, SpaceX's valuation assumes significant future success from Starlink, Starship, and AI. Starlink is already a major business, but Starship remains an extremely ambitious engineering project, while the AI strategy requires billions of dollars of additional investment. If growth slows or these projects take longer than expected, investors may begin questioning the premium valuation attached to SpaceX. Risk number three, August the 20th. Share unlock. There's a very immediate risk investors need to know about. On August 20th, approximately 320 million additional SpaceX shares are expected to become eligible for trading. That doesn't mean all those shares will be sold, but it creates the possibility of additional selling pressure as employees and early investors gain greater liquidity. And this isn't the end. SpaceX has further staggered lockup expirations ahead. Now the big question, where could the stock go from here? Most analysts maintain a buy rating with an average price target of about $231. As for my opinion, I am giving SpaceX a buy rating with a one-year price target of $200. Here are three reasons why I believe it's a buy. The biggest reason is Starlink. SpaceX's connectivity business generated $4.29 billion in Q2 revenue, up 66% year over year, while Starlink reached approximately 12 million subscribers worldwide. This is becoming a huge recurring revenue business, with opportunities across residential internet, aviation, maritime, government, and eventually direct-to-cell connectivity. Reason number two, multiple growth engines. SpaceX is no longer just a rocket company. It now has major opportunities across Starlink, launch services, Starship, and artificial intelligence. In Q2 alone, SpaceX's AI business generated approximately $2.56 billion in revenue, up around 250% year over year. That gives SpaceX multiple ways to grow over the next decade, rather than relying on a single business. Reason number three, an incredible competitive advantage. SpaceX has built an ecosystem that's extremely difficult to replicate. It designs the rockets, launches them, builds the satellites, and operates the Starlink network. That vertical integration gives SpaceX an enormous advantage and helps explain why the company has become so dominant in commercial space. So overall, I think SpaceX is a company I would want to own long-term, but that doesn't mean I would buy it at any price. The stock only went public at $135 in June, and we've already seen enormous volatility. With the August 20th share unlock still ahead, I'm willing to be patient and wait for a better entry point, because sometimes the best investment decision isn't just deciding what to buy. It's having the discipline to wait for the right price. Thanks for watching. If you enjoyed this video and want more earnings recaps with one-year price targets, please like and subscribe. Until next time, keep earning, keep saving, and keep investing. I do not own SpaceX shares at the time of this recording. This is not financial advice, just my personal opinions. Make sure you consider your own risk tolerance, time horizon, and financial situation before making any investment decisions.